Hi and welcome to the Dow Market View for Wednesday the 24th of September 2014. Going back to Monday the 22nd, I just wanted to put a few pointers out here for you, just so that bring to your attention why the trades that we had were losing trades and why they happen really. So we start off with the 231 here. We have a sell, and then we see the market move lower. The market finds support at the 17,250 before moving higher. So it begs the question of why did the market move higher? Is there something other than the buying that's coming into the market that moved the market back to the upside? And this is why it's important to check the news and why I actually put this in the daily Dow Market View for you. So if we go back to Monday, you will see that Draghi was speaking at 2 p.m, which is before the market opened. Then, of course, the market took on the reaction of what he had to say. Let's go back on that. You can see there from 2 p.m, you can see the market moving higher up to the previous day's close, and then we see the market opening there. But at 2:33 o'clock, important here, we've got high impact news item, FOMC banker Dudley speaking. Any central banker speaking is going to affect the market to some degree. Depends on the position that they hold. Yellen, of course, will create more volatility than somebody like Dudley. Nonetheless, he was speaking at 3 p.m, which is why you see this bar here reacting to what he had to say, and then the market taking out the trade there. So then the market moved on to the downside. Well, it moved lower down to we've got the support one there trading through, and then we had a sell signal which also failed to go to the scalp, and that's because the market found support at the 17,200 level. You've got to remember with the Dow is that this is the biggest asset bubble in history. It's the biggest Ponzi scheme as well. It's a market that's gone up with QE money, with borrowed money, and they are doing their damnedest to keep this market on the highs. We all know that in reality, given the economic backdrop, and 5 years down the line, 6 years more or less now, that this market or the economy isn't going to recover because of the levels of debt in the background. And this is the illusion. So the market is the sort of last game in town, and that's why the market is being held. And that's why you see here the market being held at the 17,200 all the way through the late afternoon session of the market, coming back and then coming back down towards the low there where the market retests again at the 17,000 scalp just before 8:15. In between we have a buy signal, so if you took the buy signal as well, then you will have seen the market take you out at break even, and then the buy signal, of course, resulting in a 16-point loss as well. So a very poor day for Monday, but just one of those trading days. It's the first one we've had in a long time, and they don't come along too often. But again, this issue here is FOMC, which caused a problem. And like I say, this is the biggest Ponzi scheme, the biggest game in town. They want the market up, they don't want it down. They will bring it down periodically, which is what we've seen during the last 2 days. But generally speaking, this market needs to go up. It's what's keeping the illusion alive that the economy is recovering. Yesterday's economic news was a different ball game. There was nothing of any great significance. I'll just show you this. Obviously I missed this, so I'm just playing catch up at the moment. Nothing yesterday afternoon until 7 p.m. when Lakota spoke, but other than that, and Powell spoke as well at 2:20, which is before the market opened there. So the market moving high. We can see there the 20 pip scalp being hit, the same on the downside there as well. And then late on in the afternoon we see a bit of a dead cat bounce there, where the market bounced back before moving lower just after the close there. In the daily chart we see 2 days of prices moving lower. And after the recent all-time high, you can see that being taken out over the last few days, and then prices moving just a bit lower there. So let's have a look, see where we are. This is the low to the high. We're at the 76%. We're just bouncing off this at the moment, so the market trading above on the overnight at above this level. What will be interesting to see is how well the market does on the way back to towards the 76%. And what I would be inclined to do is to draw in from this one down to this one at the moment as well. So I'm just going to save this so that we can have these stay on the chart there. So that's what I would be looking at. Also watch the high of this selling bar as well, because that will also be a resistance area for the market, which happens to be the psychological 17,200 there as well. So in today's news, what have we got? German IFO business climate new home sales for the US at 3 p.m. So keep this one in mind. High impact news item. Forecast for an increase there, but house prices actually showed a significant drop the other day when they were released as well. So it'll be interesting to see how those figures fare when they come out. It's got crude oil, which doesn't affect the Dow too much. It will on the odd occasion. FOMC member Mester speaks at 5:05. So again, just watch that one. Right, so that's us up to speed. All things being equal, I will see you in tomorrow's market view. Have a great day. As ever, thank you for your support and also for watching. See you in the next one.